Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Google time. Today's video is going to be about Google. Haven't had a trade on this yet this year, but definitely an interesting setup brewing here. Um, this is what we like to call a ramp into the report trade. It's the way it's setting up, and I'll talk about why the ramp into reports setting up, and also just some positive technical developments that have just started to play out this week. So uh, Google fell out of favor. Let's go a little bit closer here. So Google fell out of favor at the end of August. Tech rolled over. This was kind of it kind of didn't get the same boost as some of these other some of like the software names. I mean, you saw like a pretty nice run in some other tech stocks, but Google started to roll over a little bit towards the end of the month, and then it was weighed down. This was ahead of the congressional hearing, and it was weighed down by some bad PR, basically because their executives declined to show up. So it's kind of one-two punch of some weakness in some tech, and then also like kind of like that. I don't want to say black eye, but it just wasn't like a good look for them when you had other executives showing up and they didn't. So what happened was basically, Google had been up until that point one of the better FANG names. Facebook obviously got smashed on earnings. Netflix got hit on earnings. So it would kind of come down to Amazon, Google, and Microsoft. Amazon and Microsoft still near 52-week highs, but Google now has pulled back about 10%. And when it started to roll, it really started to look vulnerable because it lost the 50-day and then just really accelerated quickly below it, down to this 100-day, and it hadn't really. It hadn't really tested the 100-day in a while. I mean, the last time was in May when it broke above it. So as it kind of snowballed, you figured the 100-day would be significant, and it didn't. It did end up being important, but like the way the move happened, it seemed like this move could really tumble quick. But as the trade played out, you could see. I mean, there's really nice area of interest here above the 100-day. Buyers stepped in to defend it. And basically, over the last couple of weeks, it's just tightened up in a real nice consolidation right above that key moving average. It has struggled to bounce. So, I mean, it was a top name, and I mean, Facebook has struggled to bounce, but I mean, that stock had gotten beaten up. But Amazon bounced or is hanging out around its high. Apple hanging out around its high. Microsoft around its high, but Google still hasn't really been able to bounce. Even though there has been some positive analyst recommendations, some upbeat analyst calls around here. Um, so it hasn't really put together a good bounce, but it seems like we are getting to an area where that could change pretty quickly, and I'm going to talk about why. So first off, Monday's move kind of set the wheels in motion here. You could see that there was a relatively large gap below the 100-day. It looked super susceptible on Monday off the open. Uh, Underneath recent support. Basically below the consolidation, heavy volume. What happens was people stepped in immediately and drove this back above the 100-day and closed back above the 100-day. So a huge red to green bullish reversal candle on, as you can see down here, on really above average volume. So it was a big reversal, reclaimed moving average, and then today it's continued to build on that, which is important. You want to see buyers continue to be aggressive after you get a reversal like that. So right now it's kind of probing the top of this resistance here, and basically, if it can get through the 20-day and 1200, then you really should see a better bounce start to form. So that's like that's the first reason why it's starting to look interesting. Uh, Maybe more importantly, though, Google's entering a really strong seasonal stretch of the quarter, and uh, for whatever reason, I don't know why, for the past 3 quarters, Google has, you can see, I mean, it's pretty wild. So Google, right at the start of the month that it's set to report, so this would be January, April, and July. You can see Google had been in uh, differing levels of consolidation. So this one was like a kind of like a few week downtrend that it broke, that ran about about 100 and change points, right? April consolidation down around the 200-day, broke and ran close to 80, 90 points. July consolidation broke and ran. You had basically like 100 or like 90 to $100 move ahead of earnings. Then earnings like popped. April is probably the more impressive one, just because they had actually missed the quarter before. So I mean, you even saw buying ahead of earnings even after they were coming off a miss. So, but you can see like there's this really clear pattern of consolidations and then really strong runs right at the start of the month that they're scheduled to report. And in this case, you're seeing it again. I mean, a really tight consolidation, and now, after this week, we're going to be in October. So you have a stock that's in a tight consolidation, showing positive bullish potential reversal, also entering this really strong seasonal stretch where it just seems like things are lining up for that ramp into the report trade that I mentioned before. So what we're going to be watching is 1200. That's kind of the line in the sand for us. Once Google gets through 1200, it kind of clears near-term resistance, and that's kind of the price point that we think we want to be involved for the start of this run. And I mean, yes, you're sacrificing maybe like 10 points, but I mean, as the last 3 quarters have shown, I mean, the average move is anywhere from 80 to 100 points. So, once it gets through 1200, I mean, what's the obvious target? I mean, you have July high, you had kind of a double top around 1270, 1275. So yes, you give up like a few points, but I mean, in the grand scheme of things, if it's going to move 80 to 100, we don't mind missing like the first move just so it confirms that it's finally going to go. So we want like that clean break at 1200, and basically what we were going to do is we're thinking some short term bull position, and why short term? Because if it has a 80 to 100 point run and you're able to make money on the options before, probably not going to want to take the event risk. I mean, the way of ramping through the report trades work out is like you want to catch like the surge in volume and the surge in stock into earnings. And then, I mean, yes, you can like cut risk and maybe like, you could design a trade that is more or less, small risk at that point. If you can like lock in some money and then, reduce your risk back below like a certain threshold. But ideally, like the trade plays out before earnings. So like that's the idea of the ramp into the trade, is that it plays out before the event, and then it allows you to either close out the trade without the event risk, or capitalize by designing a trade that has ultimately a smaller debit because such a large move has happened. So that's why this one's been on our radar. Haven't traded it, but that's probably likely to change in the next few days. So kind of keeping a real close eye on this. Like the action, like the setup, and we're going to be looking at some short term bull position that probably won't go through earnings. That's the idea right now. But obviously, once that hits our radar, we'll pass it along to you, and you guys should check it out when it comes out into the letter. So, as always, please reach out. Love to hear from you. Questions, comments, anything, send it our way. Have a fantastic day of trading. and we'll talk to you guys tomorrow, all right?